Introduction. Cryptocurrency, as it currently is, has slowly developed into one of the most prominent trading options for the modern digital age, even competing with the stock market for profitability and accessibility. Additionally, cryptocurrency has developed into a respectable trade ever since its conception, slowly gaining respect from investors from all sorts of trades and eventually transforming into the powerhouse that it is now. With that being said, the development of crypto only begs the question of whether it's still worth it to invest in cryptocurrency and if the trade is a surefire thing for the future. The answer to that question is a very simple yes. Cryptocurrency is only projected to rise even more in the coming years, with some even valuing Bitcoin at over $100,000 within 5 years, which is nearly double the profit if you choose to invest right now. It isn't just Bitcoin that's subjected to the list, however, as all cryptocurrency is expected to see an inevitable jump in price at one point or another. Therefore, the time to invest is now, and the only thing that's stopping you from doing that is a lack of knowledge about the ever-blossoming online trade. This book serves as a guide that will slowly introduce and explain the major aspects of cryptocurrency, as well as help you understand which cryptocurrencies are worth investing in, which is dependent on your investment plan and future strategies. What to expect to learn. Cryptocurrency continues to be a steady, solid, yet unpredictable alternative to cash because of the central ideas and basics that address the establishment of what makes digital currency viable. All through the book, various terms will be portrayed and clarified that have an immediate connection to the development of crypto alongside how to make a smart venture. You can hope to perceive how digital currency was shaped alongside an improved examination of the blockchain organization to understand how the exchange functions in the background. We likewise talk about various sorts of coins, how to pick which one is best for you, and why cryptocurrency works like ordinary cash. Be that as it may, you will truly get a grip on cryptocurrency, get what crypto is, and where it initially originates from. Although investment strategies are talked about, these strategies are not the main focus of the book, as most investors generally learn of those concepts as they invest. Instead, this book serves as a beginner's guide for all things crypto-related, such as storage options, coins with investing power behind them, and the math behind why the prices are as volatile as they are. Disclaimer: cryptocurrency is an exceptionally unstable exchange, and although you may have the right mindset to join in on the trend, it is easy to forget just how many people lose money due to awful bad trades, misinformation, and an overall lack of judgment on the coins that they are investing in. With that in mind, only contribute what you can afford to lose and contribute nothing more than what you make back unless you can afford it. If you find yourself in a situation where you can afford to invest more money in crypto, do as such when it is reasonable, or restrict yourself to your benefits from your underlying venture. Too many stray into the red and even lose their savings over the frenzy, and although the trade is profitable, kindly be careful when exchanging on the web. Chapter 1. Blockchain's importance to the digital trade. As previously mentioned, cryptocurrency is essentially exactly what the name suggests, an electronic form of cash, and a practical one at that. Investors around the world have spent the most recent couple of years attempting to make crypto as open, fundable, and conceivable as possible to as many people as they can to acquire popularity as a form of promotion. For that reason, the more people that invest in a coin, the more cash you'll get back on your return. The same works like the financial exchange, so in case you know about that field, Crypto exchanging ought to be a simple change. However, to comprehend it effectively, you need to initially check out how it was established and why it is prospering today. This section will clarify the use of blockchain and its importance to the development of cryptocurrency as it currently is. As the name proposes, cryptocurrency was made through computerized code, utilizing the famous blockchain innovation. Satoshi Nakamoto, for example, was quick to produce crypto, establishing Bitcoin in 2009 before beginning production of the coin in 2008. Fun fact, Satoshi Nakamoto is an alias. The genuine maker's name is obscure right up until the present time. The goal for Bitcoin in any case was simple. Remove the third-party ledger from the system of financial exchange. Nakamoto believed that digital currency could only thrive if it were in the hands of the consumer rather than a ledger, and worked to create a system that could utilize that concept to the fullest of its advantages. Although electronic cash did exist at the time, it was rarely successful, and Nakamoto found plenty of issues with it before he developed Bitcoin. For example, electronic money doesn't need the approval of installments, which makes tax evasion untraceable. In the same sense, e-cash can also be duplicated and corrupted, even with a concentrated party ensuring things are running effectively. Although electronic cash opens up new opportunities for organizations and particular private companies who utilize the tool first, it can equally also present tax issues, temperamental unfamiliar trade rates, and upset cash supplies, and the likely chance of a monetary inconsistency in the market. What makes it all awesome is the availability, as cash can be moved in a moment to others everywhere. Even though it isn't extraordinarily helpful, it is restricted to the third party that oversees the trade, the exact thing Nakamoto meant to change for the future of the digital world. How does it work? Even though blockchain appears to be confusing, blockchain innovation can be separated in a basic way. First of all, it is important to view blockchain as an information base, an organized arrangement of the information held in a PC, particularly one that is open in different ways. It is a process for recording data that makes it hard to change, hack, or cheat the framework, making it unbelievably secure to use for money-related exchanges. Blockchain is the computerized record of exchanges that are copied and appropriated across the whole organization of PC frameworks. Each block contains various exchanges, and each time another exchange happens, a record of said exchange is added to each member's record. At the point when different individuals deal with a decentralized information base, it is known as distributed ledger technology, also known as DLT, to show that a gathering of individuals was behind a set number of exchanges. Every chain consists of blocks, which have three basic elements: the data block, the nonce, a randomly generated 32-bit whole number that is generated when the block is created, the hash, an extremely small 256-bit number that is connected to the nonce. Once the first block is created in the chain, the nonce is generated through cryptography. Only after this point can it then be connected to the hash. Afterward, the data in the block is considered signed and is tied to its corresponding data until it is mined and retrieved by another user. With this level of encryption, fraud and scams are put to a halt, as it is incredibly difficult for one to encrypt this level of data on their own. Blockchain is a variation of DLT, and exchanges are recorded with a cryptographic mark known as a hash. Cryptography is the use of composing and solving codes and permits blockchain's security to exist in a manner that it does. If somebody somehow managed to change the data being utilized for exchanges, it would immediately clear that the information has been altered. On the off chance that a hacker, for instance, needed to ruin the blockchain framework, they would need to change each block of data in the presence of the chain, just as every one of the other blocks has to endure the same process too. There are a large number of blocks available for use each day among Bitcoin and Ethereum, and that large number makes it almost impossible for anyone to hack into them and use them for their discretion. Overview. When it comes to your investment, you have to understand as much as you can to be as comfortable as possible with your deposit. Nobody wants to put down payments into something that makes them stressed or unsure of the outcome. By doing your research on the coin's development over time, as well as their price evaluations, which will also be discussed in this book, an investor can keep themselves more confident in their investment and keep a positive mindset throughout the process. Understanding blockchain is only the first step to understanding your options, as you need to be sure about which coins are meant for an investment plan and which coins are meant to scam you. This, along with other viable information, will be discussed in the next chapter. Chapter 2. Different kinds of crypto. The core of cryptocurrency is nothing more than a classification of coins that anybody can put resources into. The vast majority of these are produced through mining, a cycle that includes utilizing blockchain to create crypto without an underlying speculation. This aided the crypto scene when compared against other significant monetary standards, since from the beginning, it seemed as though cash was developing on trees, or for this situation, hard drives. Truly, that is a long way from the case, as it very well may be costly and harmful to the climate to oversee steady crypto mines. The energy used to keep up with the work is outrageous in the best-case scenarios, yet that style of usage is what optimized cryptocurrency to the position it is today. With a huge number of coins to choose from, picking one to invest in can be stressful, yet the experience can be very simple whenever given some work and exploration. Prior to making that decision, in any case, you need to consider a couple of things. Initially, remember that crypto is an inconceivably unpredictable and dangerous type of venture, as the market changes radically consistently. To simplify, it is incredibly volatile. Refer to the disclaimer in the introduction. In the same time span where your investment can double overnight, you can also lose all of your investment, which is why many people consider crypto to be a risky business of sorts. Make sure to only invest within your risk-loss ratio. Make a line between the thing you are willing to invest and what you are willing to lose. Viable crypto worth investing in today. Here we will detail some of the best cryptocurrency options at the moment, along with some of the fierce competitors that run prominently in the market. These coins are among the community's favorites, and it's worth understanding why these coins have risen in value and popularity over time. With that being said, let's list out the most popular cryptocurrencies at hand and their values for the future. Bitcoin, abbreviated BTC. The idea of Bitcoin previously came into creation in 2008 as a reaction to the great financial crisis brought about by the world's dependence on banks as the third party of exchanges. Nakamoto had to wander away from outsiders, which would mean disposing of banks from the situation, selecting rather to depend on a shared installment framework that didn't depend on an outsider to affirm the exchange. Supplanting the outsider would be blockchain, the innovation that records all exchanges for the general population to see, while keeping each exchange secure and almost impenetrable to tricks and hacking endeavors. With this concept set up, banks do not have to be associated with every single exchange, allowing for the process of selling and buying cryptocurrency to become much more accessible to the public domain. Bitcoin at the moment is still the most prominent crypto on the market, dominating statistics in terms of popularity and value. Currently, the coin is recovering nicely after the recent market drop. The resurgence of the bull market and rapidly growing environment in the exchange where profit can be made helped most cryptocurrencies return to form, and Bitcoin was no exception. Ethereum, abbreviated ETH. Ethereum is a blockchain-based cryptocurrency that is currently the top competitor with Bitcoin by enabling its users the ability to create their codes and algorithms using the Ethereum model as an example. From this, more and more crypto and other digital forms of money were made, as every programmer wanted a taste of the success that Bitcoin had throughout the highs and lows of the market changes. Ethereum is not only a company, however, and also has a coin, dispatching in 2015 with a valuation of USD $2.77, and in the end dropping as low as 68 cents USD. It rose to fame in the wake of conflicting with the idea of Bitcoin security by permitting both authorization and permissionless exchanges. The development of the P2P, also known as peer-to-peer, framework took an ideal opportunity to be chopped down to 12 seconds in contrast with Bitcoin's extensive 10 minutes. Other than the personal satisfaction changes, Ethereum is likewise based on the blockchain thought, with clients being permitted to send and get Ethereum without an outsider stepping into the manner. Permitting the Ethereum stage to extend to P2P framework was the organization's solution to Nakamoto's money issue talked about in the Bitcoin white paper, which is the thing that allured financial backers to purchase and bet on the following influx of crypto innovation. Today, at the moment of writing, Ethereum is the second most valuable crypto available, which makes it pivotal to understand what makes the coin's development so important to digital currency and blockchain innovation. Smart contracts. One of the main reasons Ethereum is able to thrive as much as it does is because of their innovative ability to push the boundaries of cryptocurrency and find new ways to help investors transition into the digital age of exchange. One of these innovations comes in the form of smart contracts, a form of Ethereum DeFi technology that works to replace the security infrastructure behind Bitcoin, blockchain, and all other cryptocurrencies and data alike. Ethereum works around smart contracts, and to comprehend Ethereum key agreements, you initially should get a handle on the idea of a brilliant agreement. Shrewd agreements are PC programs and conventions that can guarantee an advanced agreement between two parties, those being purchaser and vendor, and what ought to be generally anticipated on those terms. Along these lines, smart agreements can make monetary exchanges, send messages to different clients, and the principles and prosecutions of said exchange. This sudden spike in demand for a few blockchain networks, with Ethereum exploiting and becoming probably the biggest organization to run the activity. It likewise can assist with lessening the expense of customer agreements that run outside of a blockchain network, while additionally advancing the utilization of digital money and DLT. With 1.5 million smart contracts accessible on the Ethereum stage alone, the organization keeps on propelling the innovation behind blockchain, while upgrading cryptography as the exchange advances. Notwithstanding, there are disadvantages to the reason. For instance, extending the P2P framework makes the sequential request of exchanges harder to oversee, since squares of information are being put away at multiple times the speed of Bitcoin blocks. Likewise, Ethereum's movement is definitely not exactly Bitcoin's and has a long way to go before it will contend at a high scale against it. Indeed, Ethereum is the second most famous digital currency on the planet and is an extraordinary coin. However, it needs an extra worth of 38,000 USD before it really near a significant contest with its adversary. That being said, Ethereum's keen arguments are broadly viewed as a brilliant expansion to the universe of digital money and blockchain coding. Altcoins and the viable options that come with them. Altcoins are cryptocurrencies other than Bitcoin. They share characteristics with Bitcoin, but are also different in other ways. For example, some altcoins use a different consensus mechanism to produce blocks or to validate transactions. Or they distinguish themselves from Bitcoin by providing new or additional capabilities, such as smart contracts or low price volatility. Essentially, anything that isn't based on the models of Bitcoin, Ethereum, or anything of the popularity is considered to be alt. However, there are viable, profitable options within these that make them worth investing into. Ripple, abbreviated XRP. Ripple, also known as XRP, refers to technology that goes about as both cryptocurrencies and as a computerized installment for monetary exchanges. First introduced in 2012 by Chris Larson and Jed McCaleb, Ripple's main goal was to work around the SWIFT framework, which works with worldwide exchanges. The objective was to make a resource or payment settlement exchange, along with the proper security to secure it. This goal was accomplished by working through open source stages, just as executing a shared exchanging framework. This takes into account a bold exchange of cash in any structure, extending to the exchange outside of your country's nearby money. That likewise incorporates cryptocurrency, which means you can exchange your Bitcoin shares for a piece of XRP. At the hour of writing, one Bitcoin merits what could be compared to over 25,854 XRP, so people will, in general, sell a small part of Bitcoin at a superior venture cost. The concept behind privacy is what allowed people to really consider crypto as a viable investment, considering Ripple's association with third-party ledgers. Since Ripple's attention is on money-related trade and is dependent on being a worldwide installment organization, the organization counts significant banks and monetary administrations among its solid clients. They do this by executing their own coin, XRP, in their items, which guarantees a speedy change between monetary forms for outsider clients. Albeit the first Bitcoin diagram hoped to dispose of outsiders from the situation, Ripple permits them to be a piece of the interaction by filling in as a trade stage for all monetary standards, crypto-related or not. This is incredible for the digital currency economy, as it makes changing over and contributing a much more straightforward cycle than it used to be. Monero, abbreviated XMR, privacy coins. Monero, also known as XMR, was among the primary cryptocurrencies to dive into the security of cryptography, making it a form of an altcoin known as a privacy coin. Privacy coins, like Monero, make a new single-use address for every exchange known as a stealth address, so that there is no clear way of connecting different exchanges to a solitary source. After the location is utilized, it is dumped and persistently supplanted by another covert address to conceal the genuine advancement location of the exchange. Thus, only the sender and collector can figure out where the installment is sent, improving security and the trust of the P2P framework en route. Monero likewise utilizes ring marks, a technique taken on by different coins close to it. For this situation, ring marks string together numerous client addresses without uncovering which address is at last marked. This was one of the more insurgency to get serious about security, including the expansion of secrecy addresses. Other smooth-out blockchains like Mimblewimble are intended to keep a more minimal history than conventional blockchains and don't uncover any distinguishable data to the people in general. For Bitcoin purchasers who wish to guarantee a more private exchange, an interaction known as CoinJoin is utilized, which combines as one exchange of different senders and dispenses the assets across beneficiaries to blur transactions together. Forks and how they work. A fork happens when a community rolls out an improvement to the blockchain's code or essential arrangement of rules. When this occurs, the chain has a chance to split, making a second blockchain that shares all of its accounts with the first, but is taken off towards another path. On different occasions, an engineer might be hoping to utilize a fork to make a totally new crypto-biological systems. This separates the kind of fork coins out there, separating them into two classifications. Say, for instance, that during an update, new principals are acquainted all together to take action against security breaks. And 75% of the community decides to agree with these guidelines. A greater part of the coin's blockchain network is being refreshed to new conventions and is tracking as it ought to. In the same event that, for reasons unknown, the message doesn't reach everyone, 25% of individuals are not adhering to those guidelines and keep executing the old programming code into the enhanced one. These extra divides of information are what make a soft fork, just assessing its worth and from the first blockchain source code. A hard fork, however, is completely different from a soft fork. These forks happen when the first code has changed so much that the new fork is no longer able to work with prior blocks. When this happens, to safeguard assets, the blockchain parts into two and a hard fork is made. Hard forks are a completely new digital currency with the blockchain source behind it driving its valuation and moderation. In this example, the two blockchain source codes live respectively and amicably, as both are made to keep new guidelines and methodology. This is the reason a delicate fork works in one blockchain network, though hard forks bring about a split of the first code, bringing about two blockchain networks. Meme coins. Meme coins are coins made to share a meme or message, simple and distracting humor that is posted all around the web. They are a way for social media members to communicate and appreciate humor with one another. Meme coins were made as a subcategory to the ideology of memes. They have no intrinsic worth other than having the meme attached to them, as they are themed around web jokes. In principle, they shouldn't be beneficial by any means, yet individuals saw enormous expansions in their portfolio by essentially pushing the joke farther than it ordinarily would go. Meme coins are only as valuable as the community allows them to be, so it is important to understand that when a meme coin gains popularity, it's only for a temporary amount of time. Dodge, one of the most famous meme coins, saw incredible valuations that would have net any investor more profit than a Bitcoin investment if they bought and held at the right time. However, this only lasted for a couple of months until the coin's price quickly plummeted back to acceptable community levels. The captivating thing about Dogecoin and other meme coins like it was that it was so cheap to purchase a share. In December 2013, Dogecoin started at a simple 0.00026 cents. Today, in the hour of writing, Dogecoin is sitting at about 30 cents. Think about the valuation briefly. If you purchased $500 worth of Dogecoin in 2016 when it was worth 0.00027, you would see a most extreme increment of 237,000% when Dogecoin hit its unsurpassed top on May 8, 2021. When Dogecoin hit 54 cents, that would transform your $500 investment into roughly $1 million worth of Dogecoin. Individuals flippantly see meme coins as the next digital currency to burst into flames, and the low costs are what make it tempting. This makes one wonder what stays noticeable today. What else makes meme coins well known and regardless would they say are wise venture choice? Due to a surge of Doge's popularity, others saw a chance to jump on the design made by Dogecoin's engineers, which prompted the presentation of the crypto subcategory meme coins. Starting today, there are over 80 meme coins and tokens recorded on the famous value aggregator, CoinMarketCap. Many mimic Dogecoin's unique idea deeply, making coins based around a charming creature that come from web culture. An example of this is imitator Shiba Inu, otherwise called Sheepcoin, which was assembled utilizing Ethereum's open source stage and based itself around the Shiba Inu variety of canine rather than the image of Doge, hoped to benefit from. Imitator coins like to underwrite when the pattern for meme coins is exceptionally well known and bringing cash through individuals searching for the following huge thing. While the pattern bites the dust, in any case, so do the costs of imitator coins, as business sectors are in every case straightforwardly corresponding with each other. SHIB unsurpassed high was around 0.0000364 when the Doge pattern was taking off. At the point when the pattern was the greatest, it lost almost 80% of the worth inside the period of a couple of months, leaving SHIB's coin at the current recuperating costs of 0.000084, a monstrous misfortune for financial backers. Although SHIB has recovered in time, resettling back to 0.000028, investors will have to wait some time until a return is made back. The concept behind privacy is what allowed people to really consider crypto as a viable investment, considering Ripple's association with third-party ledgers. Since Ripple's attention is on money-related trade and is dependent on being a worldwide installment organization, the organization counts significant banks and monetary administrations among its solid clients. They do this by executing their own coin, XRP, in their items, which guarantees a speedy change between monetary forms for outsider clients. Albeit the first Bitcoin diagram hoped to dispose of outsiders from the situation, Ripple permits them to be a piece of the interaction by filling in as a trade stage for all monetary standards, crypto-related or not. This is incredible for the digital currency economy, as it makes changing over and contributing a much more straightforward cycle than it used to be. Overview. Various kinds of cryptocurrencies make contributing much simpler so long as you do your research. And even then, there are still coins that fall outside of the common guidelines of what a coin should address. A few coins are basically variations of other cryptocurrency, and others were made for no particular reason without a possibility of a legitimate valuation. All things being equal, you should address all parts of the digital currency market, as many individuals have made extraordinary amounts of cash by putting resources into these coins before they became stylish and famous. Chapter 3. NFTs and how they are utilized. Cryptocurrency, as proven from the previous chapter, has plenty of subcategories that help differentiate itself from other competition. Altcoins, forks, meme coins, etc. Similar to crypto coins and other assets like it, NFTs, also known as non-fungible tokens, are a prospering point for the modern cryptocurrency scene and stand out as an accessible option worth understanding. Since NFTs work a little bit differently than regular crypto, it is important to detail what makes them profitable and how they differ from the options discussed so far. So what exactly are NFTs, and how can they be utilized? They are cryptographic assets on blockchain with unique identification codes and metadata that distinguish them from each other. Unlike cryptocurrencies, they cannot be traded or exchanged at equivalency. This differs from fungible coins like cryptocurrencies, which are identical to each other and therefore can be used as a medium for commercial transactions. Sharma 2020. By identifying itself as non-fungible, this form of digital trade strays away from one of the key principles of cryptocurrency by removing itself from a fixed value and allowing the community and its creators to determine its price rather than relying on the blockchain system. For clarification, communities revolving around cryptocurrency can only influence the market in correspondence to the power of their following. Such is the case with meme coins like Doge and SHIB. NFTs, however, allow the community to determine a price for it, changing the way that trades and exchanges work in comparison to usual crypto options. Depriving from Ethereum smart contracts, NFT technology was made by the same developers who created the code behind smart contracts, providing that the technology has some legitimate background to back itself up with. This means that they were likely made with the goal of improving and evolving the cryptocurrency landscape, which NFTs have successfully done since their introduction. The main issue the tech is able to handle is market efficiency. The change of physical property into a computerized asset smooths out cycles and eliminates the need of third-party ledgers. In other words, NFTs addressing computerized or actual fine art on a blockchain eliminates the requirement for specialists and permits craftsmen to associate straightforwardly with their crowds. Where to buy prominent, profitable NFTs? A large part of the current market for NFTs is based on collectibles, like digital arts, sports cards, and rarities. Maybe the most advertised space is NBA Top Shot, an NFT made to gather NBA cards advertised in a computerized card structure. A portion of these cards have sold for a great many dollars, with some cards going for as much as $200,000 or more. NFTs shift the crypto paradigm by making each token unique or irreplaceable, thereby making it impossible for one non-fungible token to be equal to another. They are digital representations of assets and have been likened to digital passports because each token contains a unique, non-transferable identity to distinguish it from other tokens. Sharma 2020. This not only shows that NFTs have value amongst themselves, but can work alongside cryptocurrency rather than against it. NFTs do not just represent digital art and other commodities, but rather represent anything that does not have a fungible property attached to it. Therefore, NFTs can quite literally be anything, so long as the unit that it represents is valid and reasonable to trade. So long as the blockchain that processes the trade can properly identify and correlate the actions of NFTs, crypto trades can go just as they normally planned. Some of the blockchains and exchanges to enlist the use of NFTs are Ethereum, Flow, Tezos, and Solana. These, along with others, serve as a gateway to purchasing NFTs, where the crypto exchange works in the same way that an auction house would. Bids are posted for the public to see, where others can compete to outbid others until the time limit expires, and the highest bidder by that time wins the NFT of choice. Here are some of the most popular places to purchase NFTs of all varieties. Binance NFT. Binance NFT works with the prominent crypto exchange Binance to create a valuable marketplace where all NFT can thrive. The Binance NFT marketplace brings together artists, creators, and crypto enthusiasts on a single platform and trade top NFTs. Binance 2021. There's plenty of room for investors to purchase their options, as well as a detailed layout that properly categorizes all of the works into their respectable genres. Additionally, Binance NFT also comes with a mystery box option that you can purchase for any price, specifically from the viewable range of $3 to $1,000, which gives you a chance to get something valuable in order to make a profit. They also make the marketplace accessible for creators looking to publish their works for profit with the use of the Create option that the exchange uses to enlist the help of artists and creators alike. This collaborative effort is what brings the marketplace to form as a community rather than purchasing ground, making the environment incredibly comfortable for any investor looking to join in on the NFT craze. Although the list of options is primarily dominated by digital art, like most NFT exchanges, the odds of profitability seem possible given the layout of the market, making Binance NFT a viable option for purchasing your first NFT. OpenSea. OpenSea works in a similar manner as Binance NFT, but with more emphasis on the inclusion of creating art rather than selling it. Sure, you can still sell your works for profit, but for creators, OpenSea will likely be a more comfortable experience than Binance NFT due to offering users more use of the layout than other NFT exchange competitors. It has a wide range of options spanning from items, collections, and accounts. However, the most notable inclusion is their gas-free marketplace, an NFT marketplace within OpenSea's database that allows users to trade environmentally friendly options. This is a method to cope with the risk of environmental harm that crypto is often associated with. The inclusion of the gas-free marketplace is a great way to interest new users who are wary of recent environmental caution, allowing others to peek their heads into the world of NFTs. WazirX NFT. The major difference between WazirX NFT and the other options listed above is representation. WazirX NFT not only separates their catalog by collection, but also by collector. That's right. This exchange allows you to connect with people looking to sell their NFT collections in one space, rather than forcing users to sell via multiple other exchanges over time. This way, customers can make a direct search of who and what they're looking for, rather than just browsing for the hopes that something can be found. This is another way for creators to reach out to their customers, making the NFT market way more P2P than it has originally intended to be. That being said, the layout manages to stay professional and organized, leaving users who wish for a more direct digital trade an option that they can consult and invest in. Overview. NFTs, despite their notoriety and commodity value, are incredibly popular and look to take over as the new digital trade for the next couple of months, and maybe even years. The use of non-fungible assets as a digital trade option widely expands the range of use for cryptocurrency as commodities work to make crypto an essential, yet optional, part of the everyday financial world. By allowing non-fungible assets to maintain a determined community value, NFTs can be used to implement real-life motifs into cryptocurrency, helping it stand prominent as a successful, evolving platform. Chapter 4. Investing Legally in the U.S. In recent times, the U.S. government has created mandates to ban, or at least limit, the expansion of cryptocurrency trade in the modern world. This is due to the amount of losses and debt people find themselves in when investing in crypto, with many losing their sense of priority investing when it comes to managing a portfolio. That being said, there are still legal ways to invest in crypto in the United States, most of which can be done through online exchanges that are supported in the country. This chapter will detail how to put a deposit down for investment purposes and what to look for when choosing an exchange of your choice. Disclaimer: at the time of writing, banks and other third financial parties have banned transactions to cryptocurrency exchanges. Be cautious when investing and be sure that methods used to obtain cryptocurrency are in accordance with the mandated U.S. law. Putting down a deposit. There are many crypto exchanges available, which can make picking an exchange a bit troublesome. However, it is important to know that while picking an exchange, you should search for the ones that balance the convenience between low fees and high security. All in all, be certain that your exchanges aren't being charged on extra expenses you don't need, and be sure that the trade security framework is waterproof. The prudent top picks would be Coinbase, Gemini, and Binance. However, we'll develop those later. For now, let's focus on what to look for when it comes to choosing an exchange. Settle on a payment option. To utilize a trade, you will need to store assets into your record. You can do this through various accessible choices, including bank transfers, PayPal, wire transfers, digital money wallets, credit and debit cards. Remember that a few stages have various charges for different storing choices. For instance, Coinbase doesn't charge an expense for bank transfers, yet it charges $10 on wire transfers and 2.5% on PayPal exchanges. Placing a buy order. When your deposit goes through, you can instantly purchase your first request of Bitcoin or some other coin of your choice, with no hold on your account. The business sectors all have choices and outlines to oblige each digital money, so you can zero in on figuring out a decent delay and making a venture out of it. Contingent upon the platform you use, purchasing can be just about as basic as squeezing a button, or you might need to enter Bitcoin's ticker image, BTC, into the internet searcher to discover it. In any case, purchasing a coin is just about as easy as it sounds. Basically, enter the sum you need to contribute and wait until your buy is confirmed. Best exchanges as of 2021. Coinbase and Coinbase Pro are two generally extraordinary choices for a wide range of dealers, as the platform depends on effortlessness. Fees are typically low, ranging from 99 cents to $2.99, depending upon the coin's value at the time of purchase. There are a lot of altcoin choices also, and the interface is unquestionably simple to utilize. Coinbase as an organization is exceptionally high in liquidation, implying that they are in acceptable monetary well-being, which is what you need to hear from the trade where you're storing your assets. Saying this doesn't imply that the platform is great, as there are a few negatives. Expenses are higher when you utilize the free form of the platform, so moving up to Coinbase Pro is a fundamental must. Security is additionally a worry. In spite of the fact that it is tight, the client doesn't control wallet keys. This means that if a hacker gets their hands on your information, there is no protocol set up for any unexpected huge exchanges to be halted. Fortunately, Coinbase is one of the only a handful of exceptional platforms that has figured out how to stay away from debate by continually being wary of extortion coins and obscure practices. By and large, Coinbase is a simple-to-utilize trade that brings the boundary down to enter cryptocurrency. For putting resources into altcoins and different choices outside of Bitcoin, Binance is the best approach. The platform expenses are minuscule, with a 0.1% charge for the two takers and producers. This can downsize to 0.02% with exchange volume on account of the stage's own digital money. BNB, which helps lower expenses by 25%. The low expenses are an extraordinary benefit to the stage, giving Binance a wide assortment of coins to put resources into, just as a high-level outlining framework to oblige it. The disadvantage is that Binance is regularly outfitted towards cutting-edge clients, and regardless of whether you decide to utilize the work on Binance Lite, you might in any case run into issues. The platform has less exchanging sets than its partners, just as restricted having saving choices. For clients outside the US, saving and pulling out your assets can be extremely drawn-out measure. 17 US states, including New York and Texas, additionally don't uphold the trade, so openness is a major issue for the platform. All things being equal, Binance is an incredible platform with more than 100 exchanging sets to browse. Its low charges and straightforward interface make it the best platform to exchange and sell altcoins, regardless of whether the withdrawal technique is muddled. Overview. It is ideal to look at choices and consider your type of venture methodology while picking a trade. In case you are stressed with the concept of digital trade in regards to hacks and stolen assets, don't worry. Regardless of whether your security is breached or not, there's usually very little stress over it. All exchanges have some type of protection or insurance that ensures financial backers in the case of a hack or unforeseen damage to the blockchain network. The platform repays financial backers and pays for the harm out of their own pockets, so your venture will consistently be repaid in full. Some exchanges, however, have removed this option due to new US mandates, so look into whether the exchange has a customer protection clause or something similar in their exchange details. Otherwise, feel free to venture into a crypto exchange of your choice and make the trades best suitable for your investment. Chapter 5: How Cryptocurrency Can Change the Financial World. With the global pandemic currently affecting all aspects of life, the prominent rise of cryptocurrency can evidently set a standard that could change the way the world views finance. The landscape of investing has already changed with blockchain improvements, and the pandemic has also led users to turn their physical assets into digital ones for the sake of convenience. Payments, contracts, and media are using and benefiting from blockchain technology right now as a result of an adjustment process from the pandemic-caused lockdown. As new investors hoping to make a profit in a new, exciting trade, you should understand exactly why crypto has the potential to change the landscape of everyday finance. Cryptocurrency has already begun to address major issues in the financial world, such as developing counteracts for fraud through blockchain, creating an electronic fingerprint that's sustainable in a weary environmental age, and growing applications to integrate the uses of all crypto together for an overall flawless trading experience. Traditionally, the idea of a decentralized trade also changes the way regular investments should be viewed, changing the mindsets of modern investors in an instance with the potential profit to be made from crypto. In terms of how currency works and how that relates to the financial world and future valuations, there are 4 prominent factors that determine cryptocurrency's overall future value in finance, as well as details into what to look for when considering an investment. Capacity 2018. The 4 factors that determine crypto's future value. The 4 factors are as follows. Interoperability. Interoperability, by definition, refers to the ability of computer systems or software to exchange and make use of information, a direct comparison to the fundamentals of blockchain. A lot of crypto's future is dependent on their reliable security system, as if it ever were to fail, millions would lose millions in the span of a couple of days. So long as blockchain can consistently proven to be stable, cryptocurrency will be a stable trade for years to come. As detailed by Cointelegraph.com, public blockchains will prevail, and private blockchains will prevail. And this interoperability topic is really in the market, but a tremendous amount of work needs to be done. This is what companies and solutions will be coming up with in the next 5 years. Capacity 2018. Integration. Integration, on the other hand, refers to the act of uniting different things together to create a new function, differentiating itself from interoperability by focusing on the transfer of data between devices rather than the actual transfer itself. In other words, cryptocurrency needs to apply additional technologies on top of their blockchain network, as blockchain is only the backbone of crypto. Companies such as Ethereum, who can apply those technologies in an advanceful way, can overall help crypto have a future in the financial world. Governance. Governance, in terms of cryptocurrency, refers to blockchain governance, but also supply chain governance. This addresses the question of how we manage the supply chain stakeholders involved in the ecosystem. Capacity 2018. Essentially, the future of crypto is entirely dependent on whether or not blockchain systems can officially be governed and managed under a P2P system that holds no ledger and controls of transactions. If this can be managed more effectively for the future, then cryptocurrency will become a consistent trading platform for a very long time. Business model. Finally, it is important to understand that cryptocurrency, no matter the form of coin or company that supports the coin, is a business model first and an investment plan second. You must ask questions about the model, such as, how do we enable paperless business models? And how do we make revenue out of it? If we are making revenue, how do we share that with our different partners? Capacity 2018. Since the development of cryptocurrency is tied into the expansion of its partners, the ability to turn crypto into a viable business model will also turn it into an even more viable investment plan on par with even the stock market. Overview. The potential of crypto is obviously viable as an alternative investment option. With the global pandemic currently affecting all aspects of life, the prominent rise of cryptocurrency can evidently set a standard that could change the way the world views finance. Additionally, the idea of a decentralized trade also changes the way regular investments should be viewed, changing the mindsets of modern investors in an instant with the potential profit to be made from crypto. Cryptocurrency can and will change the way people invest in the future, so long as the 4 factors are addressed and expanded upon over time. Conclusion. Cryptocurrencies in general have slowly developed into one of the most important trading options for the modern digital era, also competing with the stock market for profit and affordability. Furthermore, cryptocurrency has also developed into a respectable trade since its inception, slowly gaining investor respect for all kinds of trading and eventually turning into the powerhouse it is today. That said, the development of cryptocurrencies only raises the question of whether cryptocurrencies are still worth investing in and whether trading is safe for the future. However, throughout the details expressed in this book, the answer is evidently proven to be yes, with plenty of factors playing in for the trade to be as prominent as it currently is. Cryptocurrencies continue to be a stable, solid, but unpredictable alternative to money because of the core ideas and foundations that address the creation of what makes digital currencies viable. Throughout this book, various terms that have a direct relationship with the development of cryptocurrencies will be explained and clarified, as well as shown how to make smart business. I hope you understand how digital currencies have been formed, along with a better examination of blockchain organizations to maintain an understanding of how background exchanges work. We also talked about the different types of coins and how to choose which one is best for you, and why cryptocurrencies work like regular cash. After all, to have true control over cryptocurrencies, you have to find out what they are and where they come from. Although cryptocurrency may be complicated, convoluted, and an irritating subject to investigate and study for funding purposes, with the proper guidance and information, crypto investments may be made at will and might see big valuation within a few years of making an investment. Now that you've reached the end of this book, you could begin with making an investment the second you close the cover. Some of the moves you can make with this newfound knowledge can be: research a coin you wish to invest in, find a good exchange to place a deposit, separate your buying and selling shares and your funding shares in secure storage options, checking your funding periodically if you want to verify the valuation. Once you have completed that, you are nearly set. Considering that you have all the gear at your disposal, there's no time like the present, so go out there and use them. However, it is vital to reiterate a major piece of information. Cryptocurrency is an extremely unstable trade. Only make investments that you could have the funds to lose, and make certain to finance yourself accordingly.